Hey everyone, if you're an international student here in Australia, I know tax time can feel, well, pretty overwhelming. But don't worry. Over the next few minutes, we're going to break down absolutely everything you need to know so you can lodge your first tax return with total confidence. So let's dive right in. So my name's Nehal, and I've got to tell you, I've been exactly where you are. I came here from Nepal to study back in 2019, so I get the whole journey. I've been through this exact process from studying accounting all the way to becoming a registered tax agent. And really, my goal here is just to cut through the confusion and make this whole thing as simple as possible for you.
All right, first things first. We need to talk about a huge trap that a lot of people fall into, this idea of chasing a massive refund. It sounds great, right? But trust me, it can land you in some serious hot water with the Australian Taxation Office, the ATO.
I mean, have you seen those ads? Or maybe heard about agents promising a hefty refund? That right there, that should be a massive red flag. Look, your refund is just math. It's based on what you actually earned and what you can legally claim. It's not some kind of magic trick. If someone promises you a specific refund without even looking at your details, you should be really cautious.
And you're not going to believe this, but these are actual real-life examples of things people have tried to claim. Yep, engagement rings, gaming consoles, you name it. And no surprise, the ATO said no way. Why? Because they're obviously private expenses. That's a huge no-no. So, this brings us to something absolutely crucial. You have to remember the ATO's 3 golden rules for any deduction. Rule number 1, you had to have paid for it yourself, and you can't have been paid back. Rule number 2, it has to be directly connected to how you earn your income. And rule number 3, it can't be for your private life. If your claim doesn't tick all 3 of those boxes, you just can't claim it. It's really as simple as that.
Okay, so now that we've got that myth busted, let's get into the basic rules of the game. To get your tax right, you've really got to wrap your head around 3 key things: your residency status, your tax file number, and your Australian business number. Okay, listen up, because this one is huge. If you're studying here for 6 months or more, you're generally considered an Australian resident for tax purposes, and that is fantastic news for you, because it means you get access to what's called the tax-free threshold. We'll get to that in a sec. But if your course is shorter, well, you're probably a non-resident, and the rules are totally different. All right, TFN versus ABN. Let's break it down. Pretty much every worker in Australia needs a tax file number, or TFN. Think of it as your personal ID for the tax system. You'll give this to your boss when you get a casual or part-time job. But if you're out there doing food delivery or freelancing or any kind of gig work, you're basically a contractor. And for that, you need an Australian business number, an ABN. Getting this wrong is a big deal, because you could end up being taxed at the highest possible rate, and nobody wants that.
So remember that tax-free threshold I mentioned? Here's the magic number: $18,200. As a tax resident, you can earn up to this amount in a financial year and pay 0 income tax. Pretty good, right? Now, if you earn more than that, you have to lodge a tax return. But here's a tip. Even if you earn less, but your boss took tax out of your pay, you should definitely still lodge a return to get all of that money back.
All right, let's get into the nitty-gritty of your tax return itself. We're talking about what money you have to declare as income, and on the other side, what expenses you might be able to claim back.
This is super important. You have to declare every single dollar you earn in Australia. That means your wages from your job, any cash you make from ABN work, even the tiny bit of interest your bank pays you. And yes, some scholarships count too if you're getting paid to do something. You've got to declare everything because the ATO knows, and it's just not worth the trouble later. So, on the flip side of income, we have deductions. These are the things that lower your taxable income, which is a good thing. For students, they usually fall into these buckets you see here. But, and this is the big but, remember those 3 golden rules we talked about? They apply to every single potential deduction. It's got to be work-related, you must have paid for it, and you need a record to prove it.
Okay, working from home. This is a big one for a lot of students, right? If you've been working or even studying for your job from your apartment, you can claim some of those costs. The ATO actually gives you a couple of different ways to do it.
So you've got 2 choices. The first is the fixed rate method, which is the simple option. For this year, you can claim a flat 70 cents for every single hour you worked from home. It's easy, but you absolutely have to keep a log of your hours. The other option is the actual cost method. Now this one's more complicated. You have to figure out the work-related percentage of all your actual bills, your internet, your electricity, that kind of thing. It's a lot more paperwork, but for some people, it might mean a bigger deduction. Okay, let's touch on a few other key pieces of the puzzle. These are things that can really affect your final tax bill: superannuation, the Medicare levy, and any student loans you might have.
So, superannuation, or super as everyone calls it, is basically money that's put away for when you retire. By law, your employer has to pay 11.5% of whatever you earn into a super fund for you. And get this is on top of your wages, not out of them. And it doesn't matter how little you earn, they have to pay it.
Okay, here is a massive money-saving tip, so pay attention. Most people who are tax residents have to pay something called the Medicare levy, which is 2% of their income. But since you're on a temporary visa, you probably aren't eligible for Medicare, right? So that means you can apply for an exemption and get out of paying that 2% levy. That can save you a decent chunk of cash.
Now, for those of you with a HECS or HELP loan, your repayments are handled right through the tax system. It's not like a separate bill. Basically, once your income gets over a certain threshold, right now it's just over $56,000, a percentage of that is automatically calculated and added to your tax bill. And as you can see, the more you earn, the higher that percentage gets.
All right, we've gone through the what and the why. Now for the most important part. How do you actually do this? Let's walk through it step by step. Step 1. Get your documents ready. We're talking income statements, all those receipts you've kept for deductions, and your TFN. Step 2. Log into your MyGov account and make sure it's linked up to the ATO. Step 3. Be patient. Wait until mid-July, because the ATO will pre-fill a bunch of your info, like your salary. But you have to double-check that it's all correct. Don't just assume it is. And finally, Step 4. You can lodge it yourself online through MyGov, or you can go through a registered tax agent.
And here it is, the big one. Put a giant red circle around this date in your calendar, October 31st. If you're lodging your own tax return, that is your absolute final deadline. But if you think you're going to need more time, or if it all just feels like too much, getting a tax agent on board before that date can usually get you an extension.
You know, if you remember just one thing from this whole explainer, let it be this. The secret to a good tax outcome, a better refund, isn't some crazy trick you pull at the last minute. It's all about good planning and keeping good records all year long. Honestly, just being organized is your absolute best strategy.
So as we finish up here, I just want to leave you with a question to think about. Tax time isn't just about looking back at the year that's gone. It's actually the perfect chance to start thinking about the year ahead. What can you do now to make next year's tax return even easier and better? Getting that plan in motion today can make a world of difference. Thanks for tuning in.